Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, October 25th, 2023. Hope everybody's having a fantastical day out there in the interwebs. I've had a pretty fun afternoon. It's been a beautiful day here in Colorado, and the reason I'm a little late with my broadcast today is I spent the afternoon out doing car maintenance, changing oil, and my wife's Explorer and my F-350. It's a lot of oil that goes into that truck, 15 quarts, and changed the fuel filter on my truck, and I'm waiting on the air filter to come from Amazon. So say probably about $1,000 in maintenance because, when you go to the dealership, they don't do that stuff at cost. So you have to pay them for their expertise. Anyways, so I've showered, I'm all clean, but I still smell like diesel. So reminds me of my old days back in the Navy when I stunk to high heaven all the time, and my poor wife and oldest son, I bet I smelled great every day when I came home from work. But anyways, all right, if it is your first time watching Liberty Call, I'm glad you're here. Thank you very much. If you could do me a favor, give me some thumbs ups, give me some likes, shares, subscribes, follows, hit the notification bell. You want to know when I go live, right? All right, let's get into the numbers for today. Dow Jones finished the day down 0.32%, 105 points, closed at 33,035. S&P 500 was down 1.43%, closed at 4186. NASDAQ was down 2.43%, closed at 12,821. The VIX was up 6.43% today. It's at 2019. Canada was down 0.2%. Brazil was down 0.82%. And Mexico was up 1.01%. In Europe, Germany was flat, up 0.08%. UK was up 1/3%. France was up 0.31%. Netherlands flat, up 0.07%. Spain up 0.1%. Italy down 0.52%. Switzerland up 0.23%. And Portugal down 0.06%. All right, let's head over to, the Russian exchanges. Fairly flat today. The MOEX only up 0.01%. And the RTSI up 0.11%. And the overnights, the Nikkei in Japan was up 0.6%. Australia flat, down 0.04%. Nothing on New Zealand. In China, the Shanghai was up 0.4%. The Shenzhen Component up 0.47%. The China A50 up 0.58%. DJ Shanghai up 0.67%. Hang Seng up 0.44%. Taiwan weighted up 0.3%. So yeah, it looks like the Asian markets were fairly happy, and same over in Europe. But here domestically, boy, all day the tech and the S&P was just in the red. So it was an ugly day for our markets, but again, not surprising. All right, let's get to the market recap for today. Dow ends lower on drag from Google and Boeing. Yields resume rise. All right, Dow Jones Industrial Average faced a decline on Wednesday with rising Treasury yields and Alphabet's disappointing cloud business results weighing on the tech sector. Alphabet Class A stock experienced a substantial 9% drop in its stock price, despite delivering better than expected quarterly results. The major concern was the slower growth in its cloud business, with Google Cloud revenue increasing by 22.5% to $8.41 billion, falling short of Wall Street's $8.6 billion estimate. This raised worries that Alphabet may be lagging behind in the competitive artificial intelligence market. Some analysts suggest that the market overreacted, emphasizing that the cloud segment constitutes only about 11% of Alphabet's overall revenue, while the core advertising business contributes 78% to revenue. On a more positive note, Microsoft Corporation saw its stock price rise by 3%, following better than expected fiscal third quarter results, with robust growth in its cloud business, Azure. Azure reported a growth rate of 28%, surpassing expectations of 26%, and earning accolades as the star of the show, and that was in quotes. This marked a significant sequential revenue growth for Azure, the largest ever posted by Microsoft in a September quarter. Treasury yields resumed their upward trajectory, with concerns about inflation and the Federal Reserve's potential interest rate hikes looming large. The market has nearly priced in a Fed rate pause on November 1st, with a 93% probability, as per investing.com's Fed rate monitor tool. Meanwhile, Wow. Boeing Company, kicked my knee on the desk, faced a stock price decline of more than 2% due to mixed quarterly results. The aircraft maker reported a larger than expected loss and lowered its annual guidance for 737 MAX deliveries due to a manufacturing issue with the aircraft. Boeing now expects to deliver 375 to 400 737 jets this year, down from its previous estimate of 400 to 450 jets. All right. So again, it's kind of, the porridge is not hot, it's not cold, just kind of in the middle, just kind of lukewarm. All right, let's get to some other data. U.S. new home sales scale 19-month high as median price drops. Sales of new single-family homes in the United States reached a 19-month high in September, offering a glimmer of hope for the housing market. The annual median house price saw its most significant drop since 2009 as builders offered discounts to attract buyers. This comes amid a chronic shortage of previously owned homes, which is pushing buyers towards new construction. The majority of homes sold in September were priced between $150,000 and $499,999. So if I could side note here, my wife and I have been trying to relocate from here in Colorado to North Florida all summer, and the buying pool has significantly shrunk. Granted, we live out in the middle of nowhere, and I mean it is a neighborhood, but like every lot is an acre with a house, and there's only maybe 200 houses out here. So I mean it's pretty sparse. And my realtor told me, he's like, yeah, if you had bought or if you had sold the summer of 22, you probably would have sold in a few days for like way over asking. So is what it is. I don't mind staying here another winter, do some more home updates, and or maybe just buy some property out in North Florida and build something and keep this. So it's I just didn't want to leave my house empty for months on end. So anyway, let's get back into the numbers. Bill Adams, chief economist of Comerica Bank, noted that home builders are enticing buyers with incentives like interest rate buy-downs and smaller floor plans to boost affordability. New home sales rose 12.3% to a seasonally adjusted annual rate of 759,000 units, the highest level since February of 22. The data counters a dip in home resales last month, largely attributed to rising mortgage rates and limited supply. Builders are making efforts to keep the momentum in the new housing market. The National Association of Home Builders reported that around a third of builders cut home prices in October, and the median new home price in September was $418,800, marking a 12.3% decline from the previous year. Despite the positive data, rising mortgage rates, which averaged 7.9% for a 30-year fixed-rate mortgage last week, may slow new home sales in the coming months. The housing market is already grappling with concerns about the Federal Reserve's decision to maintain higher interest rates, keeping government yields close to 5%. At the end of September, there were 435,000 new homes on the market, and housing economists anticipate the market may soften in the remaining months of the year due to rising mortgage rates and declining home builder optimism. So it's a little bit positive, Unfortunately, if you're trying to get a mortgage at 2%, that's probably not happening anytime soon. All right, last up comes from Mises Wire. It's titled, "If the Fed Goes, the State Will Soon Follow." And this is written by George Ford Smith. So let me get to my summary here. All right. The Federal Reserve's recent woke mandate, rather than being a solution, might hasten the central bank's own demise. The Federal Reserve should have never existed in the first place. Established as a rogue institution, it effectively functions as a large counterfeiter of hegemonic government and special interests. It collaborates with the government to undermine the philosophy of individual rights and enshrined in the Declaration of Independence, replacing it with a system far worse. The Federal Reserve's premise that increasing the money supply is necessary for prosperity distorts economic forecasting and creates a cyclical economic crisis it was intended to prevent. Central banks, including the Federal Reserve, have played essential roles in facilitating war by providing the credit that fuels it. World War I serves as an example, with nations departing from the gold standard to fund their military endeavors through monetary promises. To understand why nations often engage in war rather than peace and prosperity, sociologists someone who studies social people. Franz Oppenheimer's insights are crucial. God, I can't say that word. He emphasized the state's use of coercion and and to acquire sustenance through robbery, subjugating one of men to exploit them. The same principle prompts nations to regard weaker states as targets to conquer and exploit. The United States' transformation into a statist entity began with such events such as Shays' Rebellion, which Leonard L. Richards evaluates in Shays' Rebellion, the American Revolution's final battle. The rebellion was not merely about indebted farmers protesting taxes, but a much deeper conflict over government enriching a few at the expense of the backcountry. This shift towards statism impacted central banking with the Supreme Court's 1819 ruling in McCulloch v. Maryland, establishing the federal bank's authority based on Alexander Hamilton's implied powers. It's a good thing Aaron Burr shot that guy. I hate Hamilton. I wish he had never been born. Ending the Federal Reserve would in effect negate the state monetary sovereignty and usher in a new era of currency. Although people rely on the state for various aspects of their lives, it is important to recognize that the end of the Federal Reserve would not lead to warlords taking over, but rather an opportunity to take responsibility for their own lives and reestablish fundamental principles rooted in natural rights. Good stuff. I love libertarianism. Don't you? I know I do. Anyways, all right. Well, I'm going to go and enjoy the rest of it's almost evening now. It's after 4 o'clock. So I'm going to go enjoy the rest of the evening. Me and my boy Jake, our schedule's all off. We didn't get to play some ball time. Jake, you want to play some ball? Ball time. Jake, ball. Yeah. Anyways, so we're going to go out and, what time did he eat? Anyways, we're going to go have some fun. I hope you have some fun this evening. There's no sports on, so no baseball. What am I going to do for the next 155 days until opening day, March 29th or 28th? Anyways, all right. Well, I hope everyone has a fantastical evening, and I will see you guys next time. Adios.